Just a reminder that the answers provided here are general information only and should not be taken as personal financial advice. If you'd like advice specific to your situation, we encourage you to speak to your advisor or contact us directly. Joining me to answer questions here are Dan, Sharon Swan, our Chief Member Office, and Dave Woodall, our CEO of Superannuation. So let's get started. We started off by saying earlier that we've had many questions around cyber security. Anal, Sang, Sanal, Dara, Veronica and a few others actually have asked us about the steps we're taking to protect your personal information and retirement savings from scams and frauds. In my earlier presentation, we touched on this briefly, but Dave, can you take us through the fund's cyber security measures in more detail, please?
Yeah, sure. Keeping your information and accounts safe is an absolute top priority. We have a dedicated cyber security team, 24/7 managed security service provider in Securo that constantly monitors our systems for any suspicious or unusual activity. In addition, your data is encrypted and protected with strong login controls, including multi-factor authentication. We use a bunch of tools to help detect and then, if necessary, block suspicious behaviour. And we work with government and a bunch of industry experts to stay ahead of new scams. We also train our staff and we share safety tips with our members so that everybody can help everyone stay safe online. If you're interested in more details, please visit the Plum or the MLC websites.
Thanks, Dave. Peter has asked, when will Plum be setting up two-factor authentication?
Yep. Well, the good news, Peter, is that MFA, or multi-factor authentication, in fact, is already in place. Last year, we introduced adaptive MFA to keep your accounts safe and secure, which means in some situations you may be asked to complete an extra step just verifying you when you log in. It's quick, it's simple, but it does add an important extra layer of protection over your account and your personal information. The same applies if you do contact us. We may ask for some additional verification just to make sure we're keeping your account safe.
Thank you. We've had a question actually around why MLC had not used a secure website for this meeting online registration. I think I can help with this one. I want to assure Niall and all of our members that the registration website for the annual members meeting is secure. The URL begins with HTTPS, which means all the data is encrypted. If you've ever unsure, look for a padlock icon next to the URL as a quick visual confirmation that it is secure. All right, moving on to another very popular topic, which is retirement. We've received many questions from many members about this. Colleen, Katsuri, Sherelle and Scott have asked, how long before retirement should they start planning and what should they be thinking about? Dave, a big question, but very pertinent to what we do.
Really good question, a really personal question, because the answer is it's all different. But it's never too late and it's never too early to plan for your retirement. The key, I think, is trying to create a smooth transition, which does take some planning and allows you to and it requires you to think about your goals. So you want to review your savings, your investments, your super regularly. And some of the things you might contemplate is what sort of expenses or budget might you need in retirement? Expense profiles are usually different when you work versus when you're retired. What level of debt might you be taking into retirement and what interest burden does that carry? Do you need a cash fund or an emergency fund? What's your eligibility for the age pension? What are your healthcare and private insurance arrangements? And have you aligned your sort of investments in your super to your risk appetite and your timeline in retirement? I mean, retirement means different things to different people, and some people don't want to permanently retire but reduce their time in the workforce. So also considering part-time work for extra income is also very popular. But look, use our retirement tools, calculators, perhaps our SuperFit workbook on the website. And as always, either speak to your advisor or speak to us and book a session with one of our financial coaches to help you work through.
Thanks, Dave. Building on that last answer, I've had a couple of people ask, what is the retirement age and how much superannuation do they need?
Good question. Look, there's no particular set retirement age, but to receive the government pension, you've got to be 67. It's the first thing. Now, at the moment, the maximum payments are about $1,200 a fortnight for singles and just under $1,800 per fortnight for couples, and it's subject to an income and assets test. So there's no particular figure that defines a comfortable retirement because that's variable depending on your personal circumstances, your current lifestyle, your aspiration for your lifestyle in retirement, your state of health, and of course your existing asset base. However, a good starting point is to look at the AFSL retirement standard, and at the end of September 25, this benchmark will give you a guide as to how much money you might need for a comfortable retirement. And at the AFSL standard, that's referred to as, for singles, about $54,000 a year, and for couples, a little bit more, about $76,000 a year. So that's between $2,000 to nearly $3,000 per fortnight, and that assumes you have home ownership and that you're in reasonably good health. So the pension may not alone be enough to meet a comfortable retirement, and therefore you'll need to contemplate what additional savings or income superannuation can play a role in that you may need to meet your expectations. At the end of the day, having a good plan helps you make the most of your super and your other assets, and tools like our retirement projector, other MLC resources can help you estimate what those income needs might be and identify the gap. So again, please speak to your advisor or give us a call if you'd like to speak to one of ours.
Thanks, Dave. We've had a question from Lisa who asked whether MLC offers a balanced booster when transferring from the accumulation phase to the income retirement phase. And that's followed by a question from Chung who asked why the balanced booster isn't available in Plum to Plum members.
Okay, so yeah, good question, Lisa. So MLC does offer what we call a pension bonus, which is a one-off payment when members move from MLC MasterKey or Plum, for that matter, into an MLC MasterKey pension account. And it is designed to give you, as Lisa says, a bit of a boost as you kickstart your retirement income and you start drawing down on your super. Now, the current rate, which has been in place since July 24, is 1.25%. So for every $100,000 you move into pension, just over $11,000 boost. Now, to the second part of the question, if you transfer your Plum super to an MLC MasterKey pension, you may also be eligible as well. There's no minimum transfer amount, but there are some other criteria that do apply. So I would recommend having a look at the full details on our website, mlc.com.au/pension-bonus, or if that's a bit complicated, just give us a call.
Or speak to your advisor.
Correct.
Just finishing off the sentence for you, Dave, it seems to be a theme. Desmond had asked how a transition to retirement pension works. Sharon, can you explain how the TTRs work for Desmond and our members?
Sure, thanks Danielle, and thanks for the question, Desmond. Well, a transition to retirement pension, or TTR, lets you access a portion of your super once you reach age 60, helping you supplement your income as you gradually move from full-time work to retirement. Now, with the TTR strategy, you can reduce your working hours whilst maintaining your lifestyle. The income stream can make up for any lost earnings, and because you remain employed, your super savings continue to grow. It can also provide potential tax advantages. To find out if a TTR is right for you, speak with your advisor, visit our website or give us a call. And also don't forget to update your email and opt into marketing to receive our quarterly newsletter for tips and insights on retirement, including TTR strategies. And you can do this by giving us a call.
Thank you. Next we have a question from David, who was asked, why don't we have an online calculator similar to the government's smart money tool that's specifically for income streams so that you can build various scenarios to understand options for income and how long money will last? Great question.
Look, it is a good question. I'll take that one. Thanks, David. We've got a bunch of online tools that can help you plan for retirement. Specifically, the retirement projector shows how your potential super, age pension eligibility and your investment risk preferences all come together. The personal super calculator will give you a personalised snapshot of your super balance, incorporating your needs and the strategies. And both of those are available on our website.
Great. Thank you. We have another question from a different David, I assume it's a different David, who asked us to explain the difference between an account-based pension and an allocated pension. And he's also asked us to touch on the maximum contribution rules for super. Dave, can you think about those two things?
Yep. So an account-based pension, firstly, it pays you a flexible but regular income in retirement from your super balance. So you can choose how your money's invested, and there are some government set minimum withdrawals each year. Payments will continue until your balance runs out. An allocated pension is simply the older name for today's account-based pension. The features are essentially the same. With regards to caps for the 25-26 year, they are $30,000 for concessional, which is before tax, SG, salary sacrifice contributions, and $120,000 for non-concessional, which are after-tax contributions. So you may be able to contribute more using something called the catch-up contribution or bring forward rule, so that'd be more than $120,000 if that applied. There are some eligibility rules. So if you need to understand those rules or you want to understand your options around the two different types of contributions, then please speak to your advisor or speak to us or one of ours, or visit our website or give us a call.
Thank you. Sticking with retirement for a little longer, Mark has asked what the maximum age is when one must withdraw to a pension phase.
Yeah, well, there's actually no maximum age by which you must start drawing down a pension. However, moving into pension phase can provide you with some key benefits that you would want to contemplate. Investment earnings are generally tax-free, and pension payments after the age of 60 are also generally tax-free. So, that can help your savings last longer. But retirement incomes accounts, if it's right for you, you want to consider it, you want to speak to someone about it, visit our website or give us a call.
Thank you. Kevin has asked about the status to bring into law the changes for those with more than $3 million in superannuation assets, a very topical question. Sharon, can you give us an update on where this is at?
Thanks, Danielle. Now, it may help members to know that Kevin's question relates to the proposed legislation introducing an additional tax on super balances over $3 million. So the draft legislation released in December last year proposed a 30% tax on balances from $3 million to $10 million and 40% above $10 million, only on realised earnings, excluding gains accrued before the policy starts. These thresholds will be indexed and defined benefits are treated consistently, and the proposed start date is the 1st of July 2026. On 11th February, the Treasurer introduced the Introducing a Stronger and Fairer Super System bills to Parliament to give effect to the proposed tax on large super balances. The changes are due to commence from 1st of July 2026, subject to passing Parliament and receiving royal assent.
Thank you for that. A little complicated still. Stephen has asked, how prepared are we for administering the tax realised income for superannuation balances over $3 million?
Well, I guess building on from my last response, most of the new reporting and administration requirements for super funds don't commence until the second half of 2027. So based on the current timelines, we expect to be well positioned to meet the new requirements.
Thank you. Fees continue to be a matter of high interest for our members. We've got questions from Mal, Kenneth, Renee and others actually around how competitive are our fees and what are we doing to reduce them. Dave, can you give an update here, please?
Yeah, no, for sure. So our fees cover the all-in cost of managing and investing your super, including the administration costs, the investment costs and all of the associated transaction costs. I think it is best to compare total fees, as individual components within that can change. As part of our ongoing commitment in what is a competitive industry to lower our fees, we do have fee caps. The maximum percentage admin fee for MLC MasterKey Super Fundamentals and the Pension Fundamentals product, for example, was lowered from $2,500 a year to $1,000 a year for super accounts and lowered to $800 a year for pension accounts, and that was from April the 1st of this year. Next year, the same $1,000 cap will also apply to MLC and Plum personal and corporate plans. So this will give members greater certainty about the fees that they pay. We also have, for large employer plans who bring scale, may have negotiated a lower fee for their members. Our standard admin fees are 0.15% per annum, which is very competitive with other funds, including funds like Aware, Hester, Care, CBUS and others. Importantly, you want to be with a fund whose fees are not just value, but sustainable. Despite industry-wide growth, cost growth of around 10% last year. Importantly, we're tackling that issue with a partnership with a large global partner in our administration and ops space called SS&C to help drive further efficiencies and lower costs for our members over time. For example, of total costs for a $50,000 MySuper member under 55, you can have a look at the website, go to mlc.com or plum.com.au, and you can explore the detail there.
Thank you. We have a question around how insurance costs equate to the claims that are made. Dave.
Look, I think that's from Richard. Thanks, Richard. Good question. So insurance costs, or premiums, as we refer to them, they reflect the expected cost of future claims. So they're largely based on historical claims experience. And those premiums allow or include allowances for stamp duty and the costs of managing the whole insurance pool and arrangement. So rates can go up or down over time, and they're usually driven by changes in that claims experience.
Right, thank you. Shwan has asked for an explanation of related party payments. What are they? Sharon.
Thank you. Well, the short form summary related party payments is a simplified version of the fund's financial statements. It provides an aggregate of key payments made by the fund in the last financial year, such as related party payments. So the related party payments are payments from the fund to entities related to the trustee that provide services to support members. These services help us deliver benefits and run the fund effectively. They include costs for things like investment management, marketing services, board committee fees, insurance services, financial planning, and other member support. For the income year ending 30 June 2025, the NULIS trustee was responsible for approximately 637,000 members, which equated to a related party payment of approximately $512 per member. Now, over time, we expect members to benefit from more competitive costs through greater scale and simplification. Key initiatives include unlocking efficiencies from transitioning technology and operations to SS&C, which Dave just spoke about, continuing to simplify platforms and processes, and regularly reviewing related party arrangements to ensure they remain efficient and appropriate. You can find the short form summary and more details about related party payments at the back of your meeting notice.
Thanks, Sharon. I'm going to let you have a little rest of your voice because it sounds like you're about to lose it. Jacinta, Michael, James and Deng have asked, actually along with a number of other members, when cryptocurrencies will be available as investment options. Dan, this one's for you.
It is. Thank you, Danielle, and thanks for the questions. And look, right at the outset, I'd say we currently have no direct investments in crypto assets, and our position on crypto investing remains a case of not now, rather than not ever. So we continue to keep a really close eye on developments in the crypto space, including regulators' attitude to the asset. Now, we remain unconvinced of the case for crypto investing for our funds today. So if we look at Bitcoin and similar crypto assets, we really believe they fail the classic test of an investment. If we look at traditional investments like shares, bonds, real estate or businesses, they all generate cash flows, dividends, interest, rent or earnings, that provide an intrinsic value and basis for a rational valuation. Now, Bitcoin doesn't really have these investment fundamentals. It has no income, no yield, no real productive output. And its price relies solely on the hope someone else will pay more later on down the track. So to us, crypto remains a highly speculative part of the market and not really a clear investment opportunity. So for retail investors and super fund members seeking genuine long-term wealth building through fundamental investment, crypto remains, highly questionable.
We have another crypto question. It's a slightly different tack, which is coming from Wayne. Wayne would like to know what will be the impact of cryptocurrency what the impact of cryptocurrency will be when it takes over the financial system like SWIFT through Ripple and XRP.
Okay, and look, thanks Wayne for the question. And I think at this stage, we believe it's reasonable to be sceptical about cryptocurrencies overtaking the global financial system. If you just look at the scale gap alone, that's enormous. Traditional financial assets hugely exceed the crypto market by dollar value. And then on top of this, established banks and payment providers also really have deep relationships across business, government, households, and they have really delivered reliably over decades now. So it's difficult to see a really compelling proposition that would drive widespread replacement of these trusted systems with cryptocurrencies.
Thank you. The next question we've got is from Uzruni, has asked how they can track investment performance. Dave?
Yes, great question. Important to do so. And the easiest way to do that and monitor your super is via the MLC or the Plum mobile app, where you can see your account balance and recent activity. Plum members can view a quite detailed investment performance by logging onto their account online, and MLC members can see performance on our website as well and access more detailed reports by logging in. So if you'd like to understand your investment performance, use those tools. And in addition to that, if you'd like to go even deeper, please speak to your advisor or just give us a call.
Thank you. Still on reporting, Rudy has asked why they find their accounts reporting is irregular or not up to date. Dave?
Well, investment reports can be released at different times because sometimes the underlying investments, the valuation of those investments and the data sources that you need to wrap up to report across different cycles can have different durations. So while we can't see necessarily individual account details here, MLC members can log in to access their annual statements, portfolio reports, asset class summaries, transaction statements. So the detail is there, and if you'd like to talk through those reports, please give us a call. We'd be happy to help.
Thanks, Dave. A question for you, Dan. Scott would like to know whether we have plans for ethical portfolios.
And thanks, Scott. Well, the good news, Scott, is that we have an option called MLC Responsible Growth, or SRG for short, we call it. And look, since its launch just over 2 years back, it's built up a strong performance track record and competitive returns against its peers. And the SRG option has evolved a fair bit since launch to include new investments in Australian private credit and unlisted sustainable real assets. And we're continuing to commit capital to those areas. And look, we'll continue to evolve that SRG option as opportunities and scale permit us to do so.
Thank you. Sharon, we've received a question from Rahan and Subrakanan about whether they can use their super to invest in property.
I'll take that one, thank you. So superannuation can be used to help first home buyers through a government scheme known as the First Home Super Saver Scheme. Now, this scheme allows eligible individuals to access certain voluntary contributions made to their super to be put towards purchasing their first home. There are specific rules about which contributions can be released, and it cannot be used for investment properties. So we encourage you to speak with your financial advisor, visit our website, or give us a call to see if this scheme can work for you.
Thank you, Sharon. Nick has noted that investment performance has been lagging other funds and has asked why he shouldn't just leave MLC and start a self-managed super fund. Another related question is from Manuel, who wants to know where our super ranks compared to others in Australia. Dan, can you comment on this and explain why Nick might consider staying with MLC?
Yeah, sure, and thanks for the question, Nick and Manuel. And look, as most members are invested in the MLC My Super Growth portfolio, I'll focus on that to try and answer the question. And look, if we look at Independent Super Ratings My Super survey, which compares the 50 largest default super portfolios in Australia, the MLC My Super Growth portfolio has delivered very competitive and strong returns over both the short and long term. And if we look at that survey as at December 2025, it ranked strongly over 1, 3 and 5 year periods, including being the top performer being in the top 5 performers over 5 years. So performance of our largest MLC My Super Growth portfolio has been very good compared to other funds. And I should note that all these returns are reported after investment fees and tax, which means they're reflective of what members actually get. So if we switch to the second sort of part of the question, which was asking about self-managed super, and I think it's important to be aware that switching to a self-managed super fund can involve significant cost and complexity and time, and generally only becomes cost-effective at higher balances. By contrast, an employer super arrangements typically offer competitive fees, built-in insurance, professional investment management, and oversight by an independent trustee whose role is to act in members' best financial interests.
Thank you. We do hope that you want to stay with us after that question. Another question for you, Dan, from Gavin, who was asked whether MLC will consider investing superannuation in gold and silver bullion.
Okay, thanks, Gavin. And look, the MLC Super Fund does have gold exposure through investments in listed Australian gold producers. And this has really allowed the MLC Fund to participate in the strong rise in gold prices we've seen over the last year.
Thank you. Stephen has asked why MLC no longer provides free consultation and guidance to help members select the best investment option. He explained that a couple of years ago he used to meet with a consultant periodically for advice, and since then he is not sure who is selecting his investment portfolios or whether his money is invested to achieve the best result. Additionally, on a similar theme, Brendan has asked whether he can receive retirement planning advice that is specific to his situation. Sharon, these are both related questions. Would you like to take them, please?
Well, thank you, Stephen and Brendan. So firstly, Stephen, as Danielle mentioned in her update earlier, MLC offers support and general guidance to members at no extra cost through our financial coaching service. So this service can help you understand your super, explain investment principles and the options available, and support your retirement planning. It's important to note that this is general advice only, so it doesn't consider your personal situation, financial objectives, or recommend specific investment choices tailored to you. And Brendan, to your question about tailored personal advice, the best place to start is by booking a financial coaching appointment, either through our website or giving us a call. Our team can talk through the advice options we have available and what type of advice might be right for your needs.
Thank you, Sharon. We have a question from Ivan, who would like to know how they can access their superannuation after permanently moving overseas. I think this one's for you as well, Sharon.
Thank you, Ivan. If you were a temporary resident of Australia and accumulated super while working here, you may be able to access your super as a departing Australia superannuation payment if you have left the country. It excludes New Zealand citizens, and there are other eligibility rules and conditions, so we recommend visiting the Australian Taxation Office website or giving us a call for more information.
Thank you. It is complicated. A question from Prichika, who has asked whether they can bring their super from KiwiSaver in New Zealand to consolidate with their current superannuation here. Again, a similar theme, Dave, but the other way.
Yeah, so KiwiSaver is the New Zealand retirement savings scheme. And you may be able to transfer your KiwiSaver balance to an Australian superannuation account if you've moved back to Australia. However, not all KiwiSaver accounts are eligible. Pensions, self-managed funds and some other arrangements can't be transferred. So you can only transfer the full balance to a APRA-regulated super fund in Australia, and only a few super funds can actually accept KiwiSaver transfers. And at the moment, this does not include MLC or Plum. So we recommend you check with the specific fund directly before initiating a transfer. And if you need some guidance on whether a transfer is right for you, speak to a financial advisor or give us a call.
Thanks, Dave. We have a question from Zinadi who has asked what upcoming regulatory or tax changes could materially impact their superannuation balance or retirement withdrawals. Sharon, there are a few. Can you help?
Absolutely. So I guess firstly on 11 February, the Treasurer introduced the Stronger and Fairer Super System bills to Parliament. These proposals would reduce tax concessions on earnings for large super balances. So the key changes include a 30% tax on earnings for balances between $3 million and $10 million, and a 40% tax on earnings for balances above $10 million. Earnings on balances up to $3 million remain taxed at current concessional rates, and the $3 million and $10 million thresholds will be indexed to CPI. So if passed, the changes are proposed to start from the 1st of July this year. The bills also increase something called the Low Income Superannuation Tax Offset from the 1st of July 2027. There, the threshold rises from $37,000 to $45,000, and the maximum payment increases to $810. Members should consider seeking advice or give us a call to understand how these changes may apply to their circumstances.
Thank you. A question for you, Dan, from Steve, who was asked whether Plum looked at investing in any of the affordable housing products in Australia over the past 12 months.
Okay, and thanks for the question, Steve. And what I can say is MLC Super is actively participating in the federal government's housing working group, alongside a wide range of other institutional investors, fund managers, banks and industry bodies. And that group is exploring potential investment pathways, including how to make Australia's emerging build-to-rent sector more economically viable. And look, in those meetings, we've highlighted the current performance test settings may need to evolve for super funds to invest more meaningfully in this area. And now we already have investments supporting housing through a domestic real estate development fund managed on our behalf. And we've provided private lending to affordable housing initiative in New Zealand. Now, as with any investment we make, we need to be comfortable that an investment in affordable housing really benefits the long-term returns to our members.
Thank you. Our next question comes from Carr, who would like to know the benefits of having superannuation. Sharon.
Thank you, Carr. Well, superannuation helps you save for retirement by building a pool of money that grows over time through regular contributions and long-term investing. Your employer contributes on your behalf, and you can also make personal contributions to further boost your savings. Our fees are competitive so that more of your money stays in your account, and it's professionally managed with a diversified strategy designed to navigate changing economic conditions. We look after your super responsibly and transparently with strong governance, security, and provide advice and tools to help you plan for a confident and comfortable retirement.
Thanks, Sharon. And I think this might be my favourite question of the evening from Jin Chang, who's asked to tell him why MLC is the best super fund for them instead of other funds.
I'll take that one.
I would hope so.
In addition to the improvements and performance Danielle and Dan covered earlier, MLC stands out for combining strong long-term investment performance with practical support and competitive costs. Members can access financial coaching at no extra cost, and MLC's administration fees are lower than many industry and retail superannuation pension products. We also manage more retirement assets than any other Australian super fund and offer member-friendly features such as fee aggregation and a pension bonus for eligible members, all designed to help you build and enjoy your retirement. We hope these benefits give you confidence in investing your super with us. If you'd like to learn more, visit the Why Choose Us page on our website.
Thank you, Sharon. And we have one final question from Cassandra. We have time for one final question from Cassandra, who's read online that Insignia Financial is being bought out and asks, what does that mean for them and being a member of the fund? Cassandra, you are correct. Insignia Financial entered into what is known as a scheme implementation deed in June last year for CC Capital to acquire all issued shares in Insignia Financial. The deal has continued to progress since then and is still subject to approvals from APRA and the Foreign Investment Review Board. The deal has already been approved by the ACCC, and Insignia Financial has now submitted the scheme booklet to ASIC and the ASX for their review. In terms of what this means for you as a member of the MLC Super Fund, it basically means not much. It's business as usual here for us as the trustee and the management, where we are continually working hard in the best interests for you to ensure that our members in retirement have the best outcomes they possibly can. That brings our Q&A to a close. Thank you for your thoughtful questions. Hearing what matters to you helps guide how we manage your fund. For more information on anything we've covered today, please visit our website, speak to your advisor, or give us a call. On behalf of NULIS Nominees Australia, thank you for the trust you've placed in us in managing your retirement savings. And a special thank you this evening to Sharon, Dave and Dan for joining me here and contributing to today's event.